welcome to the Amber Data Derivatives podcast. I'm here with Tommy Chen of Typus Finance. Typus is a DOV options protocol as a start, which we'll later expand on. And it's built on the SUI network, which is going to go live mainnet in April or the end of April of this year. This is recorded at the beginning of April 2023. Tommy, how are you?
Good. How are you? Honored to be here.
Awesome. Well, it's fantastic to have you on. We've been in touch for quite a few years now, just early on back in the GVOL days from a data perspective. So it's really great to see you, launching your own protocol. I'd love to maybe just get a little bit about your background so you could share with the listeners, how you got started and give us a breakdown of Typus Finance.
Sure. So I joined the crypto space since 2019 into a family office, mainly based in Hong Kong. And I was there to do some discretionary research and some portfolio management stuff. And in the end of 2020, the family office acquired a centralized exchange called ABCC. And I was being assigned as executive director there to oversee the operation and product side. And after about 6 months, I was called to go to Irvine in US. The family office moved their home base to Irvine after 2021. So I was there to do more jobs, portfolio management over the crypto assets in the family office. And we actually trade a lot on Deribit and also Bybit for a while. And we have significant trading volume on both Binance and FTX. So in probably mid-2021, we built a quantitative team and most traders coming from Taiwan and Hong Kong to run some delta neutral strategy in 2021. And in the end of 2021, the family office owner wants us to build on-chain Deribit, which is Optify. So we start doing Optify on Solana, and we spent about a year building Optify. And in last year, 2022, October, Mango crashed, and we used Mango as Delta One component to make markets for Optify's order book. So Optify is an order book option trading protocol with portfolio margin and partial liquidation implemented. So we focus a lot on institutional traders and professional traders, trying to onboard them to use our protocol to trade and to provide the exact same capabilities comparing to centralized exchange. And after FTX collapsed, the family office decided not to support Optify anymore. So I got a team and I got a connection with crypto space. I got experience. So I decided that I should do something on my own. So I took the team out and start Typus on SUI. And we have connection with SUI 2022 in San Francisco in September, I think. And we like the project and we dig into their white paper. We do some research about how it can be compatible with DeFi and how it will be providing unique value on SUI to build DeFi protocols. And so Typus right now, our vision is actually quite straightforward. So we want to make on-chain liquidity scalable. And the way to do it is actually to provide a better Sharpe ratio for LPs so that they can scale their liquidity providing activities. And our solution is actually to provide a DeFi option votes, focusing more on long-tail assets, including NFTs and altcoins. I think I will stop here.
Yeah, that's really interesting. So before we jump in further into Typus, I'd like to just roll back a little bit. So you were working on Optify, the FTX kind of collapse, sort of changed all of that. Did you learn any sort of lessons that you can take with you as you build Typus from sort of the Optify days?
Yeah, definitely. So Optify is more order book focused. And during the period of building Optify, we actually have a very hard time onboarding professional market makers mainly because of order book management is actually quite costly in terms of gas fee. And for example, if you want to have at least 3 underlying assets providing 2 expiration date each underlying assets and at least 15 to 20 strikes, that's about 90 to 120 markets for market makers to handle. And for market makers to actually connect your APIs, they actually need to do stress testing about your margin system. Is it safe? And they need to examine your insurance fund. Is it thick enough? Is it good enough to cover those bad debt when extreme events happen? So in the angle of professional market makers, connecting to a DeFi product that's new without much stress testing and without much taker flow, and you don't have much users trading on it, but you need to spend a lot of developer resources and you need to take risk because of the margin system. It's actually not a good deal for market makers. So in terms of a project trying to onboard more liquidity, we need to pay monthly stipend to incentivize them, and we need to work closely with them to onboard them. And in the period of working on Optify, we actually launched our mainnet in August. So in probably October, Mango Crush. So it's actually, crypto space changed really, really fast. And it's actually very hard to build a long-term business. And especially when the business you're trying to build is a complex stuff, which is not very ready at the moment of a new chain just launching, and Solana crashes about 6 times last year. So it has a lot of doubts for professionals to put liquidity on chain. So it's actually tons of issues and problems you need to fix. Yeah, so that's why Typus focused more on retail products, retail users, and we build more simplified stuff that can do not require that much of efficiency or performance at the very beginning, and we make it very simple for either liquidity provider or retail users to use. So I think that's a lesson we learned from building Optify, which is complex, sophisticated stuff on chain is both not very cost efficient, and I think it's not ready yet, because the biggest issue I think back then or right now is retail penetration for option is still too low to incentivize professional market maker to put more resources into to take those risks and put resources on chain. So that's why we focus on doing more retail-oriented stuff, trying to incentivize retail to actually learn options and get involved in options. Yeah.
Yeah, that makes a lot of sense. So some of the things that we take for granted in the CeFi world, low latency, the ability to refresh your quotes, now all of a sudden you add latency, you add cost to refreshing quotes across a lot of different instruments, so that's a lot of quotes. And then combine that with low volume of retail flow in the first place. So it's more expensive and there's less revenue. So I can see what you mean. It's a tough pill to swallow for a market maker. Now, you mentioned the Mango crash a couple times. Can you just kind of touch on that and how you guys were using Mango and why was that important and how did the crash affect sort of those systems?
Sure. So Optify, we run a vote. We name it Delta Neutral Option Market Making Vote. So we basically took USDC as margin requirement and to put quotes on our order book. And we, if we want to maintain delta neutral, we need to find a delta 1 component to hedge those exposure. So Mango is the place we find the query to hedge. And as I remember, Mango back then is still the most liquid perpetual futures or delta 1 component place. And I think the Mango crashes or hack is because of the mismanagement of their margin system over long tail asset, especially or specifically their Mango token got manipulated in centralized exchange and got reported through oracles and make their margin system kind of broken, and the hacker or the exploiter took all the USDC and USDT liquidity out of Mango, and that's like how the Mango stuff went through. And after Mango Crush, we cannot find a place to have a liquid Delta 1 component. And hence, because our votes only took 5% Delta exposure. And until a certain level, we need to Delta hedge it in order to have quotes that has tight spreads. So our algorithm actually put around 6% spreads on the order book for options. And if we cannot make it delta neutral, we will have a significant skew. So for example, if we have positive delta, positive delta, we will have if it's buy call, we will have 20% from mid price. So it's not tradable for users to use if it's not delta hedge. So without Mango providing delta 1 component, our algo basically cannot work. So that's big. And back then we also talked to Drift and other protocols that providing delta 1 component, but the liquidity is not comparable, and it's not actually, and we also need to connect to the CPI, and actually took us about 2 weeks to do it. And after 2 weeks, FTX stuff came out, and the whole liquidity on Solana got drained, and FTX stuff also impact a family office decision on keep supporting projects to be some alpha for them. So they already own a lot of Bitcoin and Ethereum, so they enjoy the beta of the industry. So their decision-making process, I think, is also reasonable not to support those projects, but still hold those crypto assets, because it's only a small portion of their whole asset under management. So I totally understand how they make the decision process, but in myself, I got experience, I got passion. I do believe that DeFi or open finance can make everyone actually own their assets. So I still want to do stuff in crypto space. Yeah, so I move on and took the team out. Yeah.
Yeah, that's fascinating. Very cool. So now jumping on to the Typus Finance. So one of the things that Solana promised was, higher throughput, lower transaction costs, and you guys are building on layer 1 called SUI. Does that also have sort of that same promise, like more scalability, more security, cheaper transaction costs? Can you give us kind of a brief overview of the thinking behind building on this new layer 1 chain?
Sure. So we actually did a article and thread about why building DeFi on SUI. So I can narrow it down to 3 different reasons. The first of all, SUI is built on Move programming language. So Move has this asset-oriented idea or abstraction embedded in programming level, make every asset is an object, and object when the object is an asset, they embed some type system to make sure that this object has scarcity. And also they have this bytecode verifier. Whenever you want to publish your code on Chen, you need to go through this bytecode verifier to make sure that everything you've done is following the rules that Move programming language defines. So it makes our developing process and security so our developing process can iterate faster, much faster. And also the security of our code, the quality of our code is much better. So when we are doing Solana, we need to do a lot of account specification to make sure this data works like an assets on Chain. But Move actually make this automatically done. So for example, if you want to write a flash loan in Solana, you probably need 250 lines of code, and probably 160 of them is doing account specification. And in Move, if you want to do flash loan, probably you just need to do 80 lines of code and publish on Chain. And if it doesn't pass, you fix the bugs and publish again. And the code will work exactly you want because of this bytecode verifier and Move language itself. And the second reason is because they have this object-oriented stuff. So SUI has own object and share object mechanism implemented. And for every transaction that touches only own object, it doesn't need to go to total ordering or consensus. So, for example, mass NFT minting or gaming those like high frequency but comparably low value transaction that doesn't need to go to consensus, which lifts out consensus resources for DeFi product, which actually needs total ordering. So like, for example, in Solana, every transaction needs to go to consensus. So whenever there's like expected or anticipated NFT minting activity happening, the validator on Solana took a lot of stress and sometimes crash. But the situation won't happen on SUI because they can like categorize or separate transaction that needs to go to consensus and not need to go to consensus. So they can do parallel execution very fast. So like periodically, SUI doesn't have a limitation on TPS. And the finality is within 2 to 3 seconds. And so that's actually very ideal to provide a stable environment for DeFi product, which is what DeFi product looking for. Efficient and stable. That's all we need, right? And also SUI, because of this consensus mechanism, they can support like Web2 applications such as gaming or social or like marketplace. All sorts of high frequency application can be moved to SUI. So that kind of application, in my opinion, can actually onboard more Web2 users into Web3. So personally, I don't think DeFi product can do that because, for example, StepN onboard a lot of users into Solana. So I think same kind of logic that gaming and social and NFT can onboard more Web2 users into SUI blockchain. And those retail users is exactly the user what Typus product is providing for. So I think ideally, strategically, and technically, SUI is the best solution for Typus to build on.
Yeah, that makes a lot of sense. Okay, cool. So if I'm understanding this correctly, so the SUI blockchain has sort of like I call it like a move module library, which is sort of a certain set of predetermined functions, you could think of it. And
it's actually a programming language. It's
okay.
a domain-specific language built on Rust. So they have like specific asset type, making data behave like assets or physical assets. Yeah.
Got it. And then you write that code, you compile it in the sort of with the byte check, and that essentially ensures that you're following sort of that standards, and therefore the attack surface is a lot less. And at the same time, you can do parallelization of transactions, so now you have more uptime. You don't have that risk that Solana had with downtime from massive mints, or Ethereum had with downtime from massive mints. Is that pretty much? Do I have that right?
Yes, you can say that.
Okay, perfect. So now, you guys are going to launch some DOV products as your sort of first iteration. Now, does SUI have a native token? Are we going to be selling covered calls on SUI tokens? Or are you going to be doing like wrapped Ether on SUI, wrapped Bitcoin on SUI to sell covered calls on sort of those more traditional assets?
So we will be starting with SUI covered call, and I think this kind of product is most anticipated because I don't think day one there will be exchange providing perpetual futures for SUI. But so if retailers or traders looking for leverage, that's the niche point what we can provide in day one mainnet launch. So we will be selling SUI covered call. We'll be selling SUI protected put, and we will be deciding which kind of underlying assets to onboard depending on how the bridge solutions is like sophisticated or mature enough. And also we need to rely on the native USDC and USDT. So we have a long-term plan on what kind of underlying assets to bring on, but we will start with SUI token. Yeah.
Very cool. And does SUI have like a MetaMask equivalent, like a browser extension, like wallet to interact with dApps?
Yes.
Okay. So someone would
Yeah. They have Ethos wallet. They have their own SUI wallet, and I think Ethos wallet is quite actually very good. The user experience and UIs are actually very good.
Fantastic. So when you guys launch your initial DOVs, like what kind of maturities are you looking at? Are you looking at the standard sort of weekly maturity that rolls all the time? And can people both lock up funds to sell vol, or can they also take the other side of it to buy the vol?
So the biggest innovation or changes that we made is we implemented modified Dodge auction on the bidder side. So we didn't use first price sale bid like Ribbon or Friction did, because our target is more on retail. We want them to like relieve them from decision or like pricing options in the first place. And we also want people that own bid in like or two contracts of suite. So as a users, you can be both depositor into the vote, and we will provide daily, weekly, and monthly expiration date on the votes, different votes. And we will ask professional market makers to set the upper and lower bound for the Dodge auction. So retail come in, they don't need to decide pricing themselves. They just need to decide how much quantity or how much exposure they want. And we won't like limit you bidding from one contract or like 0.1 contract, or you want to bid 100 contracts. It depends on what you want. But the biggest merit for this is everyone will be settling at the same price in the end. Whenever the total quantity is sold out, we will use that price as settlement price. So you don't need to worry about price discrimination. You don't need to decide the price yourself. We will give you a range. Everything you need to decide is how much exposure you want on this underlying assets. That's it.
Wow, that's fascinating. And do you already have market makers already lined up, willing to participate?
We are still looking for market makers to be as our voter. So we have three different roles. We got depositor, we got bidders, and we got voter. So voter is the one deciding the strategy, including upper and lower bound, margin ratio, the expiration date, and what kind of underlying assets. So everything to form a strategy. And the things that market maker get out of it is a share of performance fee. So if I'm market makers, I got a traders, I can just use Typus front end to define the strategy weekly or daily or monthly. And after I defining all the strategy, the auction sold out, I can get a share of performance fee if this strategy is actually profitable. So the design, the essence behind the design is we want to align professional market makers with depositor, because as long as depositor making money, professional market makers make money. So they will have this drive or incentive to make this strategy more compatible or competitive. And if the depositor can actually makes money doing this kind of strategy, passive strategy, they have this incentive to scale this up. So yeah.
Okay, so let me make sure I got this right, because that's really interesting. So I'm a market maker, and instead of being fixed to selling weekly options in the 10 delta space, I can say, you know what, I want to do a different strategy. I want to sell monthly options in the 35 delta space. I'm going to offer that as the vault. And then if depositors start participating in this vault and they make money, then as the market maker, I get a share of that profitability, as well as sort of a performance fee passed on from the depositor to the market maker. Is that right?
Yes, exactly.
Cool. So now you have the professional market maker sort of thinking through on behalf of the retail, hey, this is probably a good strategy, and our incentives are aligned in the same direction.
Yes, exactly.
Wow, cool.
Exactly.
That's fantastic.
Go ahead. You go.
No, I was going to change the subject. Go ahead. Please elaborate.
So on the other hand, we also want to onboard more retail users as bidder to participate in the auction. So we make the auction mechanism very, very easy and friendly for retail users to participate. And our focus in the very beginning will be more on long tail assets, because some of the long tail assets doesn't even have Delta 1 perpetual futures in centralized exchange. So if you're retail, you're trying to get leverage and you don't want to get liquidated, actually buying some call or buying some put is a good place for you to get leverage without liquidation. So we also want, so the whole essence or vision of Typus is we want to increase retail penetration on crypto option side. So that's why we designed the mechanism friendly for like newcomers or newbies or like less knowledgeable traders on the option side to make them got involved, like to learn and to trade on options. Yeah.
Cool. And then, what is sort of the next iteration that you see in the roadmap of Typus? Is it always going to be DOVs, or are you going to start resembling the central limit order book style, or what's kind of the full vision?
What's on our roadmap is so the DOV part is mostly done, and what we see for the bidder flow is we also want to help some LPs in spot AMN, such as Uniswap B3. They are suffering from constant gamma risk or impermanent loss, and also like rebalancing and deciding what kind of range is tedious and hot for them. So if we can have this primary market to do volatility discovery through this auction style, we can help them better decide the price range to set up your Uniswap V3 LP strategy. Or if you want to hedge a portion of your gamma risk, you can also be a bidder. So the next step will be providing automatically hedging solution for spot LPs, which we currently have partnership with Cetus and other like AMN on SUI. And also we will do auto rebalancing on that end. So the next step is we'll build two automatic LP strategy on that. And also we saw a lot of lending protocol like suffering from liquidation risk. We also want to do something on that. So for example, if you are like a Dogecoin holder, you have $100 of Dogecoin, you're trying to lend out, get some USDC out of Arve, for example. The best you can get probably $40 or 40% LTV. But what if we can use it? What if this holder of Dogecoin buy a put option of Dogecoin and lock down the downside value of whole like portfolio to $80? If you bundle this Dogecoin and Dogecoin put option and deposit into Arve, you can easily lend out probably $70 or $60 out of it. So it's a capital efficient. It's more capital efficient for the borrower trying to use long tail asset as collateral, and it relieves those liquidation risk for lending protocol. So I think it's a win-win for both. So the risk is actually transferred to the guy who sell this Dogecoin put option. And in return, they got sick premium. So we're trying to be this DeFi risk management primitive on SUI to facilitate spot or liquidity provider to do better on their jobs. So that's something we're going to do or explore on the next stage. And we also will be doing RFQ solution to provide a secondary market for those people who already purchase or deposit in the primary market. So as long as we got a secondary market, they can start running the more complex strategies such as gamma scalping or delta one, delta neutral strategy on top of that. And further on, we're probably going to do some margin trading because we also want to provide delta one component within Typus so that they can have best synergy. So that's something we're going to do in the future.
Wow, very cool. And when do you guys plan to go on sort of mainnet and sort of go live?
We will be on mainnet day one with SUI mainnet. So I think end of April or early May should be the timeline for us to launch our DOV. Yeah.
Oh, fantastic. And if someone wants to learn more about Typus, what are some good resources or places to look?
You can go docs.typus.finance. It's public. Yeah.
Perfect. And we'll link that in the notes. So, Tommy, just to kind of wrap up here, when you're not building Typus, what do you like to do for fun outside of work?
So I love to travel. So I travel to Shanghai, and I'll be going to Chengdu after this. So I like to travel, and I like to go diving. I actually like scuba diving a lot.
Oh, cool.
So it makes me feel that I'm in a different world, or it's underwater to see some very different from what you can see usually above water.
Yeah, that's fantastic. I've never scuba dived, but that seems like so much fun. I would love to do that. And then, sort of last question here: any
Yeah,
sort
you
of
should.
any options books that you recommend that you enjoyed throughout learning about throughout your career?
Yeah, definitely, definitely. I actually learned a lot from two books. So let me hold on. So I think first one is Delta Hedging from Taleb.
Yeah, Dynamic Hedging by Nassim Taleb.
Yeah,
Yes.
dynamic hedging and managing Manila exotic option. I think I actually learned a lot from that. And for another one is, I think, volatility trading from, hold on.
You and Sinclair Volatility Trading? That one? Yeah.
Yeah, that one, that one.
Yeah, awesome.
It actually, yeah, it's actually a very, if you're a beginner, you can still learn something from it. And if you have some experience, you can definitely learn a lot. So I think it's a very good book to read. Yeah.
Yeah, I agree. Both those books are some of my favorites, and Volatility Trading is hands down my favorite. Awesome, Tommy.
Yeah, definitely.
Well, thank you so much for coming on. I'm really excited to follow your project. I think this is a really interesting perspective, and listeners probably learned a lot. I learned a lot. So thank you for coming on.
Thank you. Appreciate. Happy to be here.
Awesome. We'll see you next time.
Thank you. Cheers. Bye bye.